Bitcoin's already kind of near the bottom of its historical valuation range based on a number of different metrics. So I think I think that we're closer to the bottom. I try not to call absolute bottoms because, just sharp price moves and unexpected things can always happen. But I think generally speaking, in order for Bitcoin to start getting a bid on in a more structural basis, one, which I think is we've mostly already done, which is all like the fast money generally has to be out. So the fast money coins people have already sold, they're on the AI. The coins gradually rotate to entities that are rarely going to sell. And then that starts making the marginal supply demand balance is just more kind of locked in. And so it only takes a small amount of capital to want to come back in.
Markets have a strange way of distracting investors at exactly the wrong moment. Just when everyone becomes convinced that one trade is unstoppable, another quietly begins laying the foundation for its next major move. Right now, artificial intelligence has captured nearly all of Wall Street's attention. Capital has flooded into chip makers, memory companies, and data center infrastructure. While Bitcoin has spent months frustrating bulls and testing the patience of even its strongest believers. But what if that apparent weakness is actually part of the setup? That's exactly one of the shocking and interesting insights Lyn Alden reveals in her latest interview with Natalie Brunell. Unlike analysts who rely on bold predictions or emotional narratives, Alden builds her outlook from liquidity, capital flows, valuation metrics, and market structure. She rarely speaks in absolutes, which makes it especially noteworthy when she says Bitcoin now sits near the bottom of its historical valuation range, and explains why she believes many of the conditions for a durable recovery are already beginning to fall into place. In this interview, she breaks down why AI has become the dominant destination for investment capital, how that rotation has quietly drained liquidity away from Bitcoin, why miners are facing one of their toughest environments in years, and perhaps most importantly, what specific developments could finally trigger money to flow back into Bitcoin. She also gives a surprisingly candid outlook on whether new all-time highs are likely anytime soon, an opinion that may challenge what many investors have been expecting. Before we hear directly from Lyn, if you enjoy thoughtful macro analysis instead of hype, make sure you leave a like, subscribe to the channel, and turn on post notifications so you never miss future videos. I'd also love to hear your thoughts throughout this discussion, so drop your opinions in the comments as we go. Now, let's hear why Lyn Alden believes Bitcoin may be much closer to a turning point than most people realize.
It surprises nobody listening to this. And of course, AI is the biggest trade on the market, names associated with AI. And of course, there's winners and losers from that dynamic. And these have kind of come in phases. I mean, obviously, one of the early winners was NVIDIA, selling the GPUs that powers a lot of this. Once they already ran a lot, and especially once we shifted from, chatbot style AI more towards agentic AI, memory became very much the bottleneck. So we've seen a huge surge in the memory stocks. And really since like autumn of last year, so autumn of 2025, that's when the hyperscalers, so we used to refer to them, like some of them as the Mag 7, the big internet companies we all know, the Microsofts, the Metas, the Alphabets, Amazon, these really big companies. They used to be extremely free cash flow positive. They would operate things like Google search or network effect social media. Really sticky operating system software that they have very high ROI. They spend a lot in absolute terms, but they only had to spend a small percentage of their profit, so they could channel all those extra free cash flows into buybacks or dividends and things like that. But ever since autumn or kind of the second half of last year, they've made very aggressive capex to build out, data centers, to buy these chips that are increasingly expensive because there's supply demand mismatches, and so we've seen like a virtually unprecedented fall off in their free cash flows. Some of them have gone free cash flow negative. Some of them have gone out to debt markets, trying to raise as much capital as possible rather than just purely funding it from cash. They've generally reduced or halted their buyback. Some of them have increased their share counts. And the market has not been, they've been a little bit concerned around that because, free cash flows dried up. They have to hope that years from now that these investments pay off with the returns that those hyperscalers hope they will. The other side of that, of course, the chip stocks, especially, the later round of RAM stocks, and then companies that make the machines that let the RAM stocks make the chips. Like there's kind of a whole like cascade of dominoes. Those have done amazing in recent months. Other losers in this kind of market dynamic are, of course, a variety of software companies that are perceived. It's not clear if it's right or wrong yet, but they're perceived to be, likely going to be very disrupted by AI. So far, it's not really shown up in their fundamentals too much, but it's shown up in their share price, kind of, discounting the future. And then we've also seen pretty poor performance from both gold and Bitcoin. Bitcoin kind of peaked roughly when the free cash flow was just drained and everything kind of fled into these high performing memory stocks. And so, some of them, there's obviously capital rotating out for cause and effect. And there's other ones where the marginal source of capital that might have been chasing that really big gold rally that there was, or might have considered Bitcoin the fastest horse in the race, as Paul Tudor Jones once said. They see memory stocks going up, like doubling in months, and then going up, in some cases 10x in a pretty short period of time. So a lot of capital has kind of gone into those markets, and I think a lot of that move is rational. I think like the rise of course of chip stocks is rational to a point. I think like many big moves, I mean, these things tend to get ahead of themselves to some extent. So you can always overshoot, and you almost certainly will. You almost never invest exactly the amount and value a new thing perfectly. Usually you overshoot and then undershoot in the other direction. So yeah, there has been kind of a big capital drain and a rotation toward especially the second wave of kind of semiconductor rallies.
Lyn's explanation paints a much bigger picture than simply saying Bitcoin has been underperforming. In her view, this isn't primarily a Bitcoin problem at all. It's a capital allocation story. Investors have been chasing the extraordinary returns created by the AI boom, particularly throughout the semiconductor supply chain, and that has naturally pulled money away from nearly every other opportunity. But markets rarely stay one-sided forever, and history shows that when one trade becomes overcrowded, capital eventually begins searching for value elsewhere. That brings us to another important piece of the puzzle. While investors focus on prices, an equally important battle has been taking place beneath the surface inside the mining industry. Some miners have pivoted toward AI, others are struggling with rising costs. And Alden believes the long-term consequences could actually strengthen Bitcoin's decentralization. Here's how she explains what's happening.
In general, Bitcoin mining and AI have very different economics. And so, Bitcoin miners, there's, somewhat less upfront CapEx, but then it's more like the sheer amount of electricity they use. So they need very, very low electricity costs. It's hyper competitive. But they have the advantages of, they don't need high bandwidth. They can go in the middle of nowhere with a Starlink and monetize what they're doing. And they can have off time, because the network keeps functioning even if, miners are coming on and going off. It's kind of the whole point of a decentralized network. Mm-hmm. And so Bitcoin miners are better at getting energy on the periphery, kind of stranded energy, either in terms of time or space. So if you have an area with a ton of renewable, like, if you have a ton of solar and wind electricity, like, parts of Texas and things like that, and you are generating a lot of electricity one part of the day and then less so another part of the day, they can turn on and, take a lot of that curtailed energy for nearly free and then shut off when that energy's gone away. So they can do that in a way that a data center can't do, because users care about uptime for these, these high performance compute data centers. High performance compute data centers also care about latency. They generally want, all else being equal, they want to be somewhat close to a population center. And they need very high or a somewhat high bandwidth. So Bitcoin miners that are positioned with energy resources that are more persistent, it does make sense economically to shift more toward AI. And I think that kind of pushes Bitcoin miners toward the scrappier parts of the market, the ones going out to get the stranded natural gas, the ones that are able to shut off at certain parts of the day with no problem in exchange for having the lowest electricity rates. Kind of the maximum flexibility in exchange for the lowest rates. And if anything, that should be decentralizing for the network. I'd rather have a bunch of scrappier companies around the world trying to find all the stranded energy, either in time or space, than these kind of massive, huge, concentrated data centers, which is generally more suitable for AI.
Where are we at in terms of the cost to actually mine Bitcoin versus the spot price?
I don't have it in front of me at the moment. I mean, right now, pure Bitcoin miners it's rough out there.
Yeah.
That number will vary somewhat because it
Mhm.
depends on the individual miner's electricity costs.
Yeah.
Generally speaking, the ones that invested with pretty high energy costs, hoping that they'd have just persistent, six-figure Bitcoin, they're the ones that are kind of in
Mhm.
the most trouble. Whereas the ones that have really low energy costs because they're really good at getting that stranded energy, they're the ones that are generally holding up. But
Yeah.
it's a rough time out there for miners.
So when do you think capital will rotate back into Bitcoin?
So I think partially the current chip move has to slow down, right? Because there's something just soaring upward that's gonna draw a lot of attention. So I think that, and there was a spook in the market, kind of like last week when Meta came out and said they have excess compute. We did see a kind of a sharp sell off in a number of chip stocks and kind of a shift in momentum that we haven't seen since April. So that might be a temporary reversal. I think Bitcoin's already kind of near the bottom of its historical valuation range based on a number of different metrics. So I think I think that we're closer to the bottom. I try not to call absolute bottoms because just sharp price moves and unexpected things can always happen. But I think generally speaking, in order for Bitcoin to start getting a bid on in a more structural basis, one, which I think is we've mostly already done, which is all like the fast money generally has to be out. So the fast money coins people have already sold, they're on to AI. The coins gradually rotate to entities that are rarely going to sell. And then that starts making the marginal supply demand balance is just more kind of locked in. And so it only takes a small amount of capital to want to come back in. It could be entities saying, hey, from technical analysis, it looks like Bitcoin might be bottoming. It could be fundamental, contrarian traders that say, hey, I used to be in Bitcoin, I jumped to AI, but now all these things are up 5x or 10x and Bitcoin's over there down in a bear market. So maybe I'll rotate capital back in. And then once it starts climbing, you get momentum traders involved. So I wouldn't try to predict the exact timing. But I think, I think there's not a lot of obstacles in its way, other than just probably or chips have to slow down a little bit to let other parts of the market become a little bit more interesting to those that have otherwise just been going straight up. My guess is that that we're unlikely to reach new all-time highs this year. I wouldn't say it can't happen. I mean, Bitcoin has a ton of volatility. And that's both the upside and the downside. So, a bunch of things could come together. It only takes a little bit more than a doubling for Bitcoin to have new all-time highs from current levels. But that wouldn't be my base case. I think that a couple of years out, I expect to see new like fresh six figures, and then hopefully climbing to above the prior high. This year, I think kind of the base case that I would hope to see is just like a lack of new bottoms in place, and that kind of like just a better kind of technical picture pointing kind of flat to up rather than the kind of flat to down that it's been in for a period of time here.
One of the biggest takeaways from Lyn Alden's analysis is that markets are rarely driven by emotion for very long. Capital follows opportunity, and over the past year that opportunity has overwhelmingly been concentrated in artificial intelligence. But the very success of that trade may eventually create the conditions for money to rotate elsewhere. If AI stocks begin delivering smaller returns while Bitcoin continues trading near historically attractive valuation levels, the balance could begin shifting much faster than many investors expect. Equally important is her perspective on Bitcoin miners. Instead of viewing today's difficult environment as purely negative, she argues that economic pressure naturally rewards the operators capable of finding the cheapest and most efficient energy sources. In the long run, that process could make the network even more decentralized and resilient, rather than weakening it. It's another example of why Alden tends to focus less on headlines and more on incentives, economics, and market structure. Perhaps the most refreshing part of the conversation is her willingness to acknowledge uncertainty. Rather than promising immediate all-time highs or dramatic price targets, she explains why Bitcoin may simply need time to rebuild its foundation before the next major advance begins. In a market filled with extreme predictions on both sides, that measured approach is exactly why so many long-term investors continue to respect her work. As always, none of us can know exactly when the next major move will begin, but understanding why money flows through markets often matters far more than trying to predict the exact day prices will change. If you enjoyed today's analysis, please leave a like, subscribe if you haven't already, share this video with someone following Bitcoin and the broader macro markets. Thanks so much for watching, and I'll see you in the next video.